they got it, but let's buy some land and build a family. That's a grown-up flex. And see a black man winning and get so upset. This is generational, inspirational, integrative though. On the rise vertically, working like I ain't made it though. This is for my people. Locker room speeches. Listen while I'm teaching. Nails trying like a kiss. Stole it like I'm Jesus and brought it back like a re-up. Had to demonstrate the blessing for people who couldn't see it. Now we building assets before we splurge our cash. We was talking about the dream, dog. We heard y'all laugh. Now they talking about the team and I heard y'all last. I could never take the credit. I prefer all cash. Look, laughing at the crib cause I done turned.
Welcome to PBS Show Season 2, Episode 17. How are y'all doing today?
What's going on? What's going on? Welcome to the Private Bank Society Show, PBS podcast. My name is Iggy. We're here with Dr. Jake. He'll be in. And we got a special guest that we're going to introduce to y'all in a moment. It's been a little bit of time since we've had this show. You guys may have been tuned into our other show, the BBSR, where we're talking about buying, building, selling companies, understanding the different strategies, talking about the new book release and really understanding more about what it is we have going on when it comes to that aspect of things. But we're back with the Private Banker Society Show with talking about our hot topics, talking about things going on within the banking industry, talking about bank shutdowns, business fails, and just other things that are going on. So with that being said, what's up, Doc? How you doing?
Hey, man, listen, this wasn't going to be no show without me now.
Listen, what's up, Doc?
Listen, we had to get this stuff together. Y'all know Mogul has abandoned us.
Yeah, so y'all get on Mogul.
He's abandoned us, and it's because he went to Mexico because he wanted a vacation or do something. He said that, but we're going to be sick of him when he come back. And I got jokes, but I'm going to wait until.
We're going to wait till he get back and he's able to defend himself.
Yeah, we're going to wait until he's able to defend himself. So listen, no matter what platform that you're watching, we got a crazy, crazy guest today. And I'm just going to do his bio now because I think y'all got to know who right here. First and foremost, y'all know that we don't do guests. Y'all know Dr. Jake really don't trust people, okay? Because y'all know they be here on this internet lying. They just be lying. So with this guy right here, he actually had an office. That was step one. Step one, do they have an office? Step two, do they have a staff? See, those are the two major things I like to start with, just to go with there. And then then I peeped around his office. I said, show me around. He showed me around. He has a nice spot. And then I saw something that was really crazy. He did over $160 million of loan origination last year. And listen, that ain't
no small number.
Listen, that ain't
itty bitty.
Hey, that's almost $250 million.
Yeah, that's a quarter almost.
Well, we might as well. We close to round.
We can round it up.
If we put a little color context on it, we like to embellish a little bit.
That's what we're gonna do. We're gonna do that. Yeah.
Okay, he did nearly $250 million.
Yeah, that's nearly.
That sounds good, right, B?
It does.
Yeah,
all right, listen. Hey, don't show him yet. Don't show him yet because listen, y'all gonna see him, and some of you ladies, I seen a ring on his finger, so just know.
Y'all chill.
Brad Pitt is taken. So Brian was born and raised in Dallas, Texas. He attended Lake Highland High School. He has 18 years of experience within the mortgage industry, and in his recent position, he was the top producing mortgage originator. He won several awards. I told y'all one of the awards I seen in incentives because of what he does. Texas Tech grad. He's put a strong focus on building a large network of clients outside of the real estate industry. So CPAs, attorneys, financial advisors, financial service related associates, because he's really big on building a community of pretty much like superstars so that he can continue to add value to his community outside of just real estate. He loves golfing. He and I got to golf. I love golfing, but it's more therapy than me being good right now.
I was about to say because
it's more therapy than I'm good right now. But eventually, time is going to make me good.
When you on the driving range though, it's pretty good though.
No, I'm off the driving range now.
I'm saying, but when you on the, I ain't seen
when
you.
I was on the driving range, I thought I was a man. But I also had a trainer right there, and then I went out there into that golf. Yeah, that's a whole nother. So I'm earning every inch of my membership at Las Colinas. Okay, I'm earning every inch. In his free time, he said he likes to volunteer with various church functions. He likes to spend time with his family. He's been featured in D Magazine, DallasMortgageNews.com, Candy's Dirt, Forbes Magazine. Y'all heard what I'm talking about. This is another Forbes guy.
Oh.
Another Forbes Magazine guy.
Credentials.
Just credentialed up with proof. And a plethora of publications, which means he's somebody that you don't want to play with. Y'all, welcome to the welcome. How we want to welcome him? Welcome. We can't say welcome back like that. This is new for us, so I don't even know how to.
Yeah, then we got to figure this out because.
All right, so we'll do it like this. Welcome, Brian, to the stage.
Welcome, Brian, to the stage. What's going on, buddy?
I'm good, man. Thank you guys for having me. I appreciate it. This is going to be fun. Looking forward to be the first guest, hopefully the best guest.
Numero uno.
Just here to give everybody game, man.
Hey, listen, I'm actually excited about it because, one, y'all already know I really only trust one person in the real estate world. Her name is Jamisa McGyver, Dr. Jamisa, 29 years old now, 29 properties, a hotel, multi-family properties, all debt-free. She owned all properties debt-free. She tough than them, you got to meet her. But when he and I start kind of talking, and we got on social media, and I started kind of listening to how he sway and how he talk, and winners know how winners talk.
Listen, when you had the interview with him, as soon as you finished, like you called me, you was like, bro, this guy, amazing dude. He did this amount, does this,
listen,
and he know what he talking about. He not one of these these folks that's out here talking.
I cheese when I find somebody that's like me. I cheese. He didn't know I was scouting. I'm looking. I said, okay.
Yeah.
All right, because he never told me, what he's done. That's how first I noticed how you're a winner. And then when you kind of peep and you see how the staff approaches him, how they respect him, and then how he honors them too, with what they do, like that gained a lot of respect for me. So how this normally works, y'all already know. We get our word of the day because the number one focus is to make sure that we increase your vocabulary so that you can start speaking in a much more affluent way. And then two, we talk about hot topics. We're going to straight facts. And then for the first time ever, we'll be doing a full interview of what's going on. So welcome back to the Power Bank Society Show. Y'all already know. I'm excited. Let's get it going. Chandler, what is the word of the day?
Alrighty. So the word of the day is esculent. So this simply means edible.
Edible?
Yep. That's all. It simply means edible.
Okay, so esculent means edible. All right, so we got to use this. We got to use this in a sentence. So esculent means edible. So think about that. He gonna go first.
So some of these things today that I be seeing, these new foods, I'm not sure if they esculent or not.
Ooh, esculent. Okay. What you got?
Hey, everybody right now that lives in Colorado is going to start talking about esculents versus edibles.
That was good. Hey,
I like that.
Hey, listen, I ain't got nothing to say.
No. Yep, you got to come on.
Okay, I got it.
What you get for let me roll first?
I know it, dude. That was a good one too. I got them esculents, dog. Hey, I got them esculents. You got them esculents, dog. All right, so when it comes to edible, Dan, you already said a lot of food today. It's not esculent. All right.
Oxtails shouldn't be esculent.
Yeah, thank you. Oxtails should not be esculent.
Oh, I'm happy to see your progression.
First and foremost. Did you know oxtails were actually an oxtail?
No, I just thought it was like a buzzword. Like
bro, no, see, I'm being funny.
No.
Yo, me too, bro. Then when he showed me, it was literally an ox's tail.
Mm-hmm.
And that's the only piece of the ox that is like meaty and soft. I almost threw up in my mouth. I can't even eat it anymore.
We was in the air. He was like, bro,
because like, listen, y'all know I love oxtails. Yeah, I'm a little old school. I'm a little country. And you eat oxtails?
No, but I'll try.
Okay, you gotta try it, and then
like not eating.
Then you can't eat it anymore after that. Because it's just absolutely disgusting after you figure out exactly what it is. And it's kind of disheartening. But so, how do we do, Shan? Who won? Me, Iggy,
Listen, he
or
wanted
me?
Yeah, I'm gonna have to give it to me. I'm gonna have to just step to the side on that
I'm
one
gonna have to
because he
say
came.
Brian.
Wait a minute.
Yeah.
You giving away wins?
Listen, he earned that one.
That was good. That was
He
good.
earned that one.
Dang, he came on the show whooping you. Cause usually
It was
you,
off the top, but
Yeah.
I'm the first guest. I got to
Yeah,
perform.
yeah.
come on, man.
Yeah, he earned that one.
Escalates.
You know I ain't giving away no wins.
That's
He
what I was
earned
trying
that
to
one.
figure out. Okay, them escalates. What's up with the hot topics?
All right, so hot topics for the day. So the recent fall of major banks, including First Republic Bank, yesterday has caused concerns that the U.S. is on the brink of a financial catastrophe, one that could resemble in the 2007-2008 crisis that led to the Great Depression.
All right, let's just start right here. Especially with the Great Recession. You were in business in 07, 08 in the real estate business. So
Wow.
a lot of this,
Hit
you've
you
been in
direct.
these waters before.
Yep.
So in case y'all didn't know, a lot of this is going to be focused. So we want to hear his opinion on a lot of the hot topics and straight facts. But Brian, when it comes to these major banks kind of falling out, everyone doing a bank run, how does that hurt or help the real estate industry for people that want to buy homes and properties?
I mean, when these banks start to drop their warning signs. So, things don't drop like that unless there's major pieces moving behind the scenes. And what normally happens is they move behind the scenes and they hold them up and they get relief. And so therefore you never really feel it. When they can't hold it up anymore, they have an announcement. So this is what's starting to happen. Now on the real estate side, for those out there watching, real estate's a fixed asset that goes up over time. It appreciates long-term, just like the stock market. So when people don't know where to put their money, because they don't have clarity on what their future holds, you can always put it in something that's secure that goes up over time. It may not go up 10%, it may go up 2 or 3, but it's a nice hedge against what's going on. It's a safe play. So this is where you're seeing people, securitize their money. You see these big articles like BlackRock's buying up $30 million in multifamily and single family, and I thought, well, there's supposed to be a housing crash. Why would they do that? They know what we don't, which is that fixed asset and securitization of money over time will help them, but there's also good ROI there. So the real estate industry will benefit from this, one, because it's a more confident and sturdy asset and the money doesn't fluctuate as much. But two, one of the problems we're facing now is there's still a shortage of inventory across the U.S.
Yeah.
So the demand for homes are up, so the price is up on its own.
So, well, let me ask this then. Especially you talk about BlackRock. When you talk about multifamily homes, are they doing 4 units and down? Or are they going a bigger?
I think both. I think it depends upon where they're buying. So some of the story behind it is they're buying it from an ROI investment standpoint. Some of it is they're buying it because they know exactly where they're going to relocate their employees, and a benefit to the company is, hey, I'll get you a house, right? So it can be a strategy from a recruiting tool as well, plus with tax law and write-ups on all that. But also if they're trying to figure out, where do we put our money? No one really knows. I mean, crypto's up and down and bond markets are up and down. And overall, yeah, houses have dipped in the past 9 months, but pre-COVID, they're still way up.
Got it.
So if your house went up 40%, it's dropped 12, you're still up 28.
still
It's
up,
better
yeah,
than
yeah.
what it would be.
Got it.
And people know that when there's a shortage of inventory,
Yeah.
the natural demand's on the move. So right now, it's hard to lose, even at a 6% rate.
And Iggy, when it comes to the banks kind of like shrinking and people kind of scared because of what's going on with the banks, how has that helped or hurt our marketing, especially with people on our tech products and stuff like that?
When with the banking situation, one of the things we had to do was definitely take a look at our pricing structure and also take a look at how it is we're communicating with the marketplace when it comes to like trends that are going on, when it comes to the messaging that we have in the marketplace, understanding the real pain points of what's going on right now in people's lives. And what we've noticed is that a lot of people in the marketplace, that prices were up, trying to provide a service, trying to have large profit margins. Their business suffering. What we saw even like before things really got in the thick of things where they are towards the end of or the beginning of the fourth quarter last year, we started making these pricing adjustments both in our pricing as well as in the way that we advertise and market it. And we've been able to see our customer base not only sustain but also continue to grow even through these times because of the offerings and how we looked at things in the marketplace.
There was a little bit of a revenue hit though.
Yes, correct.
Because
Absolutely.
We had to I was telling Brian, we had to give almost like a 60% discount
Correct.
during this time just to be able to sustain our customer
Right.
base.
And so the bigger reason for that is, is not just to keep the margins there and still having the same amount of revenue coming in, or more so looking at the customers and the amount of customers that we were able to keep and continue to grow, so that we can have a larger customer base, because we know when it's time for the exit, that customer base is going to matter for the people who are looking to buy, so that they have the products they want to infuse, upsell, cross sell along, or couple it with the actual technology. Yep. So we definitely saw a hit when it came to revenue, but in terms of actual customer size, as far as the customer base, we saw a sustainment and an increase in the number of customers, which long term, as far as our strategy was beneficial for us. But we definitely saw that. And
that takes me right back to Brian, because you brought up a major point on seeing having to make adjustments price wise. Has there, in the real estate market, especially with people wanting to get loans, because that's the meat of your business, right? Have there been rate cuts? Like, have the banks been trying to find ways, or have they been able to find ways to be able to incentivize people to still want to get loans during this time? Or has your business had to make changes, or is it still the same even during a market like this?
Everybody's corrected. Interest rates doubling in a 12-month period is going to correct something, right? It's just a matter of what it corrects and who it corrects. So there's been a correction. I don't think it was necessarily a bad thing. The COVID run was so strong that, even though it might have been good for the pocketbooks for some folks, it really wasn't that good for potential homeowners. You just pushed them out of the game. So the correction was okay. Everybody's made adjustments, whether it's staff, business practices, policies and procedures. I think the hardest part, specifically in Dallas, is over. Real estate is all local. Okay. So when we're looking at stuff and we see, CNBC, Fox News, whatever, these headlines, they're blanketed. It's a U.S. deal. So the game is not the same in Dallas as it is in Kansas, it is in California, here and there. Generally, sure, but what people need to look at is in their own backyard. Economically, Dallas is a great city, great people. It's good, growing, good tax policy. So you've got this adaptation, this culture of people wanting to come here for a multitude of reasons. Could be weather, could be sports or people. But when you have a surge of folks and a population spike, there's still housing needs.
Got it.
And, the takeaway is people have to understand that renting is not a good long-term strategy. It's okay, but when you're renting, you're paying a mortgage, you're just not paying your own. You can't do it forever. And so while interest rates slowed things down, the hardest part of the correction is over. I think what people really wanted was clarity. Where's the bottom? They just wanted to make sure they didn't buy at the bottom and everything wasn't going to fall apart. And you're slowly seeing rates come down, housing pick back up, and that's because I think people have a little bit more clarity and security in the housing market, but also people have FOMO. Honestly, they missed out 2021, 22. They've been sitting on the sideline for 3 years being like, that $300,000 house is worth $400 now, and I've been wasting $90 on rent here and there. And so people are cool with getting in at a 6% rate, paying what they think is a fair price for a house, just saying like, hey, it might be a monetary and financial thing, maybe, but some people are like, dude, I just want some roots for my family. Understood. I want a place to call my own. I want Thanksgiving at my house. And I know even if I buy right now, you can refi in a year when rates are cheaper. But if you're in it for a 10-year play, it's like your ROI is going to be fine, because in Texas, houses historically appreciate at 4 or 5% a year. So the long game is what people need to think about, even if right now is not perfect. Because high interest rates, low prices on house. Low interest rate, high prices on house.
Oh, let's sit on that though.
Right.
Yeah, let's sit
But
there.
that's not the case right now. People are like, how come so many people are buying? Because if things are 6.25, shouldn't it shut it down and cool it off? In theory, yes.
What does shut it down and cool it off mean for those that don't
It means that normally when interest rates get that high, when money gets really expensive, people step back and they say, I'm not spending anymore. Okay. And it cools things off, so it shuts the activity down. It did temporarily for 4 or 5 months, maybe last August through Christmas. But on the flip side of the coin, why it hasn't cooled it off as much is because two things. The housing shortage as of 3 months ago was like 6.5 million houses short in the United States. Wow. So when there's that much of a shortage, it's 3 guys trying to go after 2 steaks.
That's right.
Somebody's going to up the ante.
Right.
And that's what happens.
What
happens right now.
Okay.
The other thing is people understand that if they get a home loan right now at 6% and the market's up, it's not a forever loan. It might be a forever home, but it's not a forever loan. These are 2 different things. So if you can pick up a house that you like at a decent price and get your feet wet and get in it, your 6% in your mind, it's a 9-month play. It's a 12-month play, because interest rates follow inflation. So as inflation goes up, rates go up with it. Inflation comes down, rates come down with it. So as CPI and inflation naturally come down, the projection is that mortgage rates will be about 0.5% by Christmas. So people know that they're on the down. It's still figuring itself out and getting its footing, but it's way better than it was 3 or 4 months ago. But the flip side of the coin is, well, I'm just going to wait till rates drop to 5.25. You and everybody else. The problem is that when you wait on cheap money, it pushes everybody off the sideline. When it pushes everybody off the sideline, the demand goes way up, which means the price of the house goes way up, which means what you save in the rate will balance out with the price of the house. But the other side is you might not even get that house. It's going to cost more, but on a scale of 1 to 10, you probably get a 7 right now. In 9 months, when rates are lower, that 7 is going to be a 6 because the inventory is so thin that you have to take what's available versus getting it now at a decent price, at a 7, take a 6 whatever rate, understanding that a year from now, that house will be worth 10% more because if rates are 1% less, imagine the demand that's coming off the sideline. All these human beings in little inventory, so it'll push your price of the house up too, which means your ROI is better because you're making money on the upswing versus paying 30 grand next year. Yeah, the interest rate's better by 1%, but the offset is basically apples to apples, plus you miss out on the appreciation if you buy next year versus now, you may pick up 10%. So people need to know how to think this way. They need to know the game specific to Dallas, but also historically how this is why so many real estate people compound their wealth. Like I tell everybody, getting houses is like poker. Once you get chips, the game becomes easier. Your wealth creation through real estate is 10x. As long as you don't screw it up, you'll be okay. But you got to start small and you got to know these things. All if you see is rate and payment, that's all you pay attention to. But all the other factors are important. And this is why people need to know how that circle of life works so they make the right decision. I'm not like, well, I'm just going to wait till 9 months and so my interest rate will be 1% lower and my payment will be. In theory, yeah, but if that house and that price is up 8-9%, it's a wash. But on top of that, like, do you really want to deal with the chaos, the wild, wild west? When you got 10x buyers, when rates dropped to 4.99, they're just coming off the sideline. You don't believe me? Look during COVID when rates were at 2.99, 3.99. It was nuts. Nobody could get a house under 600. People were paying $50K over out of their pocket, sight unseen. Everybody I did from California, all these reloads didn't even come here. They'd FaceTime their agent, overpay by 100 grand. So just know that low interest rates causes a lot of activity. It's good in some areas, but if you're a home buyer waiting and you're running thin, or you're worried about that right house, it's better to think about it now and consider it. Because again, now that you think, oh, this is probably a 9-month deal, a 12-month deal as far as payments are concerned, you're not so scared about the 6. You can get the 5 the following year, and then you'll make up all the money on the back end. Long term, don't sacrifice it for the front end, which is just waiting on the rate.
And with me being I'm a recovering F the bank guy, I have a way. I feel a certain way when it comes to, and my audience knows banks,
and you should
loan guys. Like
and
I just
should.
Because I know the history of banks. It's been hard for me to even imagine that until meeting some people like you, that kind of brings some form of understanding to the concept, especially with us teaching people how to buy and sell companies, leveraging SBA-backed lenders. So it's changing kind of the context now of how we kind of see things through a glass of different chasms or different classes, if you will, that people are in. When I graduate this class, then there's a different ball game. When I graduate this class, there's this ball game. So being the fact that to me, there still are so many dirty loan advisors in dirty banks,
100%
backdoor loans that you didn't know had all these other rates to it. How can someone be able to even determine who they should be working with versus someone else? So if somebody wanted to decide between you and another person, and both of y'all can get the same quote unquote rate, if you will, what will be the determining thing that can help them be able to say, you know what, I would much rather work with Brian's crew versus this? And how can someone be able to determine who's full of shit out here in the market?
Great question. So, bad people in any business are in it for the good ones. I don't care if you're athletes. I don't care if you're bankers. I don't care if you're in marketing or whatever, right? The wrong people run it for the good ones. So how do you separate the good from the bad? And what's the process behind that to where it doesn't ruin the whole party for everybody? Because wealth creation is great. Good debt is okay. Leverage debt is okay. You just have to know who you're talking to going into it and understand how to navigate it better with a roadmap. So to your point, I always say I'm not a silver bullet for anybody. What somebody has to think about for them is if you're picking a mortgage advisor to work for you and on your behalf, you have to ask yourself, what are the top 3 things that are most important to you and why? Similar to, hey, if I have a daughter and she's getting her tonsils cut out and I'm going to choose a doctor to take good care of her, what would be the 3 things that made me go, wow, and choose that doctor for that person? It's the same thing. Now, most things in business come from trust. That trust has to be earned. Most of the time, trust is earned through another source, which is a referral partner. So if I say, hey, Jake, my wife needs blah, blah, blah. Who's your car guy? Oh, my car guy, Steve, give him a call here and there. You have experience with them. So that triangle of trust, which is you know them, they know me, together here and there, that's the referral piece. But let's pretend like you were brand new to Dallas. You didn't have anybody to trust, right? So you had to go blind and say, like, how can I figure all of this out? Go online, look at somebody's years of experience, go meet them in person. To your point, how does their staff look? What are their accolades? How many people are raving about them? Go on, check out their reviews. All of these things matter. It's very similar. You and I have talked about athletes. Somebody can brag that they're really good at X.
Right.
If they don't have a ton of raving fans, if they don't have a ton of Super Bowls, All-Star games here and there,
Some
the chances are they
receipts.
aren't. Right. So this is where, buying a house really for the most average day person is the biggest investment of your life.
Yep.
So you want to do it the right way, and there's a big, wide path to do's and don'ts, and you got to know that. So again, experience is a big component of it. For the person, it's like, hey, I just don't want to get a loan. I want to know how to run a budget. I want to know how to create a wealth map. I want to figure out my ROI over here. Should I pay off my credit card with this 10 grand or should I put it down on the house? All these things matter. So go through the discovery process. But if you know somebody that's in any type of financial services, insurance, mortgage, anything, ask around. It's very easy just to hang back and be patient. The good people will say, yep, that's the right person for you based on what I know and the bad. And then you go interview them and date them and say, they might be good for the industry, but are they good for me?
That's
well,
right.
Let's figure out what's a good fit for you and what you want, kind of like we're dating each other.
That's right.
And then if I'm a good fit for you, great. If not, it's okay, but make sure you got a professional with experience on your side.
Yeah, and I think that dating who you're going to work with in general is a good thing. I think that we all try to get married to the concept or the person too fast because they sound good, they talk good, they sound like they have the information. But if you don't have anything to compare it to, everybody's always going to seem amazing. But if I have some type of comparative analysis that I can use to be able to determine who I want to work with versus who I don't, that would definitely hurt a lot. But let's get into. I want to get a little bit into your story.
Yeah.
And then I want to get some transferable business advice from you, and then I want to end it with some cool real estate stuff that people can kind of hang their hat on, business wise, and building their portfolio.
Perfect.
So how did you get here? The nearly $250,000 loan origination man, doing some amazing stuff with your own platform, specifically here in the city of Dallas. What was your start? Did you always have it figured out? Where did you get started after college? Just kind of let's start there.
So first of all, I still don't have it figured out. Ask my friends, ask my wife. I'm a mess. I'm just less of a mess this year than I was last year. So don't let anybody out there, no matter if they're 20 or 80, tell you that they're all good. They're not. Honesty and vulnerability is a big thing, right?
Facts.
So how I got in the industry, I didn't know anything about it. I finished college December 2004, moved home with my parents, and of course they said the same thing everybody else does. You're not going to go out and party and sleep in it, jack around. So my dad's like, get a job. So January rolls around. My mom helps me put together my resume. I go to a recruiting company at the time called Snelling and Selling. The first job, they said, like, hey, we have a loan officer job outside sales. Do you know anything about it? I'm like, no, I don't even know what that is. But I want my parents off my back. So they said, well, get started. There's a good training program. They'll pay you $500 a week every Friday, and then you get 10% of whatever commission things that you close. So for me, I was like, oh, wow. $500 a month. Now, mind you, I was a kid in college right behind that. I was living on $100 a week. So every Friday I'm getting paid $500. I'm like, I can get a new shirt and I got money for the bar.
That's right.
And the third one is my parents are off my back. So let me do this for 6 to 12 months just for that part of it.
Yeah.
And I'll figure it out. Well, I was a finance major. I always liked people and relationships, and I've always been a problem solver. I didn't know it till I got older, but I love that piece of it. And so the mortgage business has a lot of that, which the financial piece, the relationship piece, but solving problems, whether it's financial, credit, or whatever. And so after going through it, and mind you, when I came in, it was the subprime game, which means like I didn't know at the time, that's not how it's supposed to be. Anybody could get a loan.
Oh, so you came in during a time where everybody was eating.
I thought that was normal.
Oh!
I thought it was normal.
Okay.
I thought it was normal not to show your income, your bank statements, just things off the cuff, Wild Wild West, because you come in at 23 and you don't know.
Yeah.
This is the standard. No one ever taught you. So when I come and I'm having some success,
Yeah.
I'm enjoying it. I'm meeting new friends,
Yeah.
hanging out. I think this is normal lending. Why wouldn't you? And so I really enjoyed it.
He said, "Why wouldn't you?"
Why wouldn't you? You don't know, especially at that age.
Yeah, yeah.
And you don't know markets, and you don't know industries, you don't know fluctuations. So you just get in the game and get on the field and say, it is what it is. Plus your mindset is this small. So you're thinking 8 to 5, and can I just go hang out with my friends on the
Yeah,
weekend? You're
yeah.
looking at the full scope. So, I run that for a few years. I like it. And then I realize, trending into 7 into 8, things start to happen. And I'm like 25, 26, whatever at that time, and I'm still doing okay. There's a couple older guys that said, hey, you're pretty good at this. But at that point in time, like, if anybody could take an application, they would have done okay.
Yeah, yeah.
And then things start to drop, which is what everybody's seen previously on The Big Short, on
Yes.
TV, where these banks are going out like a Hollywood movie, done, boom, crashing, blah, blah, blah. And it was literally like a 6-month run to where every other week it was bad news. Shutting down, foreclosures, this, banks dropping,
You
blah,
know what
blah,
this
blah.
sounds like? Right now, everybody that came online during the pandemic, it just seemed like everybody was just
Correct.
people that didn't. I'm looking like
How did you get
how
here?
like you
How?
like how like it took me this long to be here,
Right.
And you're trying to compete with me neck and neck. And there's no background receipts or in it. It's like nobody needed anything. You just start something, you can start winning. But now during this market, now we're able to determine who really got the sauce during this market. So that's what you were dealing with at the time, right?
Correct. And so everybody was making theirs, having fun. The downside is it should have never been that easy. And when when it is like that, it's not going to last forever. So the bottom falls out. As a guy in the mid to late 20s, you learn the hard way, which is like, it's not supposed to be like this. And then you start realizing companies are buying companies and merging, going out of business. I mean, I had 2 or 3 banks I was doing loans with. You get an email that says, we're out of business.
Wow.
You
Banks
got to
just
call.
like that.
You got to call people and just say like, "Sorry, I know you're watching TV, but this is really happening. I can't get the loan done." And eventually, it becomes a reality, which is like more bad than good. And you're like, "This ain't going to fix itself. It's a problem." So when that happens with the ripple effect over a 6-month period, it checks the industry, but it checks every human in it too, and it checked me. And so for a period of time, it really hit the bottom. There was no income. There was no loans. It was a problem. So I had to get a job. For 3 or 4 months as an asset manager.
Hold on, back up now.
Yeah,
back
yeah,
up.
you
'Cause
can't just
there's a
scoot
lot of
past that.
nuggets in this story.
There is.
There's a lot of nuggets in this story.
got more.
And the biggest nugget that I'm hearing in this story was that you came in to a market that was bursting.
Mm-hmm.
Things were amazing for you. And then it shut down.
Correct.
And you
Quick.
didn't know how to navigate that. And you had to go back and get a JOB in order to stabilize yourself until you can figure out what angle or what route that you want to go. Now, let's talk about like where did that frame of thought come from? Because I know a lot of people may think that that's a normal frame of thought, but it's not. Ego gets in the way, pride gets in the way of you just being able to like dial it back down so that you can re-strategize and focus again. Like who was around you that told you that it was okay? Did you grow up when your parents were like, hey, listen, just figure it out, you're fine? Like what shaped you to be able to say, no sweat, I'll just go get a job and we'll figure it out? Or was that a battle?
It was a battle, but I also think too, when something like that happens and you step back and you look at it, when it's like it's across the globe, you realize like it's a problem. You have to adjust. Now, I probably didn't adjust that well then as I'm telling it now, but you realize like this ain't going to course correct itself within a month. It's a huge issue.
Yeah.
So it came down to a choice, which was like, okay, am I going to make it in this industry? What's going to happen in the industry? I don't know. But in the meantime, I have to do something to create income. So of course I call my folks and they help you out once or twice. But other than that, it's like that's it. Grab a shovel. So sometimes life forces you to do that, which is like you can't sit around and feel sorry for yourself. You got to do something just to stay above water. So my something was, a lot of jobs weren't even available then. But what happened is when this foreclosure wave hit, there's a flip side of the coin in the industry that's like a janitorial trash out cleanup.
No, stop.
I'm fixing to get in my third job I had at one time. Yeah.
No, stop.
Yep.
So you go from being the one getting you into the house
You got it.
to
Full
being the
circle.
one that's cleaning it out.
So the second
Talk
part,
about it.
Right.
Yeah.
So it goes from loaning the money to make the deals work, the deal's not performing, everything collapsing. Then I go work for a company that has to manage the portfolio, that everything's collapsing, and I have to approve the things that are needing to be done to the house. They call them trash house, janitorials, yard cuts, whatever. And when somebody gets their house taken from them, they don't leave clean. They screw it up. They kick in holes. They do all kinds of stuff here and there. So I'm approving this stuff during the day because they need human beings to say, yes, this much trash, and we'll pay you $10 to do this and cut the lawn, because they're trying to get the houses back in order enough to circulate it to get it ready for the realtor.
That's right.
So they can sell it and start over. Now, the third component of this,
Okay,
just so you guys know, I had a third job at the same time. One of my best friends at the time was an awesome blue-collar guy in Houston now. Shout out to Robbie, awesome dude. He got smart and said, well, who's hauling around all the trash? Who's actually in there doing the paint work? Who's getting everything done? I'm going to start a business, get a truck for a loan, throw a trailer on it, and all these banks that are paying to go clean it out, I'm going to be the guy. So he started that, and that other job that I had wasn't making me enough money. So when I got off at 5 o'clock nights and weekends, I throw on some gloves, get some Taco Bueno, roll with him from 7 to 12, and we clean out the houses, and they pay you per house, per picture.
hold on, wait. Come back to me.
Right.
Come back. Wait, because listen, there are so many freaking nuggets in this story, and this is how we're able to determine like where somebody really is.
Yeah.
Because for some reason, we talk about this all the time, how for some reason people think that we circle around each other peers and talk about our wins. The amount of time we talk about our wins is, I expect for you to be a winner.
Yes.
Like, I expect that whatever you're going through, I expect for you to figure it out, because that's why we're communicating. That's why this energy is on the same level. We spend more time talking about those war wounds, because if you can tell me, okay, that's what you did. Okay, let me not do that. Even today, we got an email from somebody that's one of our peers, owns 120 businesses, jets and all this other type of stuff. Shot me a DM and was like, hey, Jake, pay attention to this, because I got my handed to me doing that. But in this space, he's readjusting. He's having to figure out a way how to turn his business around while supporting his family and his life, and still trying to figure out, okay, what am I going to do when the market turns, when it curves, all the way to years later now, doing nearly $250 million worth of loans. See, if you say that enough, you're going to start to realize, damn, I was close.
Yeah.
So in this process of really thinking, right? Now let's really process this. You went from feeling like you were the man, 23 years old, killing it, to now you're getting gloves, going to your third gig. What was the mind frame that you were dealing with? What were you listening to? What books were you reading? If you can remember during that time, that kept you focused, energized, excited, and and optimistic about the future.
Yeah, I mean, the third job, so I've got them all at once, right? I'm cleaning out toilets, moving furniture out the house, and over a period of time, what kept me going was two things. Pain, which is I don't want to do this, and I don't want this to be my career.
Okay.
Until I find it, I have to do the right thing, which is just keep the lights on. Second thing was, a lot of people during that time, guys, girls, whatever, I mean, everybody was in the trash. So you weren't the only one sulking. So I had a couple boys around me that are helping me clean out things here and there. We're keeping each other elevated, right? So your friends in your community during that time can help you, because everybody's in the same boat, especially when you're 20s, you ain't really got no money. He had a baby at the time, was married at the time, stuff here and there, but the stuff's already thin. And in a market like that, it ain't turning quick. And so these losses are actually lessons. And there's no way that anybody can be as good as they want to be unless they've taken some L's. It's just how you take the L and adjust. So when you're young like that, I come into an industry where you don't have to know something, and then it pops pretty quick for 24 months, and it's a bad tailspin, and you have to do what you can do. So I was a loan officer with no loans for 9 months.
Talk about it.
I'm clocking in at a $40K salary just to keep it on, but I want more. But also my buddy's like, hey, we should be the people that get approved. Let's go clean up all this trash and get it done because the money's better. And I'm like, I got time. I'm single. I need a compound that I got to get out of the hole. And so we're rolling over a long period of time. So I get to a spot to where I'm out of the financial hole, but I'm in the mental hole of like, this sucks. I don't want to be a loanless loan officer. I don't want to work behind this desk and approve this stuff. And I don't want to be digging in trash cans and toilets to get it all done. So I had to make a decision. The decision was, am I going to commit and beat what's happening, or am I going to let it beat me? Ooh. That was the moment. And that came from a place of
you want to preach
pain.
Today?
Yeah.
You came here to preach.
It came from a place of pain, which is like, I don't want to feel like I'm going to lose overall. So the only thing I knew how to do at that time was, well, I don't have a lot of money. I don't have a lot of resources, but I'm single with a ton of time. What I can do is put in mad work. And I just told myself, now I have to learn the loan rules. It's not that easy to get an application. I got to network here and there. And so I just committed, honestly, to doing 80 hours every single week, learning just proving to myself, even with one loan to get
Hold
over
on, how
the
many?
hump.
Wait. How many hours a week?
80.
Now, hold on. You committed. Notice he didn't segment the hours. He committed to 80 hours a week, but his main focus was loan origination, getting people loans, and he had no loans out. So
There was no money to loan.
Okay.
And the rules were 3 times as hard.
Okay.
So my thing was, okay, well, everybody used to be able to get it. Now nobody can. So how am I going to beat this? So one, my mantra is knowledge is power.
Okay.
That's my whole deal. So I'm like, if they made it really hard to get loans, I clearly have to learn how to do them if I want to make it happen. So I got to read these guideline books. They're like phone books, right? So that's where I started, was like, I'm going to learn at least some small stuff, one step at a time. And then my whole thing was work ethic, meaning like 80% of the LOs got washed out of the business because it's too hard. They were making $100K a month doing nothing. Now you got to make $5K a month doing 3 times as much. No, thank you. They moved on. But I saw, okay, well, somebody has to be there to do it. It might be twice as hard, so let me at least try. I'll do this versus clean out toilets in foreclosed homes. Let me put in 80 hours, read the guideline books, and I literally lived in a subdivision in Plano in a townhome with my boy, and I used to walk up and down the sidewalk every single weekend and walk into open houses with my laptop and be like, hey, I'm Brian. I'm a loan officer. Can I work this open house? For 4 years straight, I never missed an open house, 50 weeks out of 52 in a row. And I put that mindset in and just put blinders on and said, I'm going to do it.
This is with no loans.
That's it, 0. And I start going, and then after 9 months, 10 months, it goes, and I get a couple loans, 1, 2, 3. And then what I realized was like, all right, I kind of understand the rules a little bit now, but what I realized is I'm in a desert. There's no LOs. And these realtors still have to get money from a mortgage guy or girl to make the deal work. The problem is nobody knows what they're doing. No one left. And so that's when I appeared on the scene for the first time, was working these open houses, walk up and down. And I'm sure they could see me as a young guy walking in. Here's my business card, shaking hands, build the rapport. They could tell I wasn't distracted. I was committed to them. And 1 brick at a time, I got 1 realtor and 1 loan. And then a couple months later, 1 realtor and 1 loan. And I rode that out for like 4 or 5 years. So call it 9 or 10 to 12, 13 was the 1 loan, 2 loans, 3, 4, 5. And then what I figured out was, okay, I know the rules enough. I'm not going to make mistakes. But at the same time, like, people are not working like I'm working. So I went back to blue collar, old school, which is just like hit the gym, chop the wood, grab a shovel, do work. And for me, that became a proven thing, which is like, I ain't the fastest, I ain't the tallest, I ain't the smartest, whatever, but I can get up at 5 a.m. and I can put in mad work and I can clock out at 7, and that's going to be hard to beat. And so I took that mentality for years and years and years and was able to get myself back on track. Nothing fancy, but I was paying bills. I was a little bit ahead, but I was on to something, which is like, okay, I beat it. Now I can't get complacent.
Solid foundation.
But I put up my gloves and went 12 rounds and I won. So as long as I keep on going, I'll just top grade myself and all this stuff over a long period of time. And I realized that putting in that kind of work wasn't an everyday easy task for everybody. And so where I could shine was putting in the work ethic. And then once you have that and you learn the guidelines, like how to read a tax return, how to do all these things, you marry the two together. And so then you become a power workhorse with a big brain. And if you got a personality, you know how to talk to people, it comes together full circle. But it didn't get here at a $250 million without so many trials and tribulations, going through a ton. Now we have an amazing team of 10 people in Dallas, and why I get all the shine online, I'm telling you, the teamwork is what makes it work. There's no way I could do anything without them, but we're at a place now to where we are enjoying it, helping a ton of people. But I told you, at 42, I'm getting to the place of like on the back half of my career, it's a legacy piece, paying it forward, both to teammates, to partners, but also to clients. Because the home ownership game and the mortgage game and the financial one is a tough one. And we're not taught that in school. And so part of becoming a certified planner for 2 years was figuring out the strategy of 6 steps to financial freedom, wealth accumulation, how to run a personal budget every month. These small things that compound over time. So it's like doing 10 sit-ups doesn't do a whole lot. Doing it for 20 years and then adding on jump rope, adding this over time, and that's the mindset. So that's the way that I approach the mortgage business, not keys to the house. That's the fun part, shopping, seeing the brick, the bedroom for your daughter here and there. But getting your money right through this piece is what people actually want. It's just that most lenders, the barriers of entry are so low to become a realtor and a lender. It's great and it's terrible. So if you want to become a lawyer or a doctor, you have to go to medical school or law school. The bar is so high that when you become it, no one questions your character and the quality. Lenders and agents, unfortunately, can go from being a bartender to a lender in 60 days. Now that's great because there's a lot of people out there that are really hardworking and smart, and they'll elevate the industry. The downside is, to your point, there's a lot of people that are pretenders. So the 75% waters it down. Well, you can't play that game with a house. You can't give people bad advice and let the house and the mortgage and everything mess up. It takes forever to course correct, and it's too much of a burden and a hit on somebody's lifestyle, their credit, their financials, and their family. So where you have to step in is you have to have the knowledge and the communication and the connection, but you have to have proof of concept and evidence of success.
That's right. That's right.
And your partners and your clients are the ones that are going to tell the story over a period of time. So fast forward a decade later, 2 branches, 10 teammates in Dallas, 5 in Lubbock. We're having fun. The industry's starting to correct itself. Thankful to be in Dallas and just seeing what I can do to bring value to everybody, because no question's a bad question. You just got to know how to discover it and figure it out for yourself.
Listen, I got some. I still got some questions.
Bring it.
Because just in the story, of course, we got some industry specific questions, but I really think that we're getting some of the feedback here in the chat, and they're saying, "Man, this is so good." They're saying research, course correction. Don't be listen, they taking nuggets here.
A free plug, DallasMortgageNews.com. At the bottom of the homepage, my 6 steps to financial freedom. It's all free. Go download it. Talk with your spouse, your family, whatever, for yourself.
Dallas Mortgage, what?
Yeah. DallasMortgageNews.com. It's my website. So it's got all the stuff on there, but I give the free game out on there. Just search, check it out for yourself. And obviously all the handles, Dallas Mortgage Man, YouTube, and that. I try to just pay it forward. Like, people are attracted to the fact that I'm giving it away and saying, like, look, this will help you. That's what builds trust and connection, which is like, hey, this realtor's not trying to sell me this house. This person's not trying to give me a loan. This person's trying to help me in all these areas. And so that's why I put it all out there and say, see for yourself. Yeah. If you don't feel me and my value isn't there, that's my fault. Not your fault. So
listening to your story, you said amazing, somebody said crazy info right here. You said something that was amazing. And the piece that was amazing was, you stated, all of the people that were making good money and it got hard bailed out. Oh. And you saw that as an opportunity, although you weren't making good money and you didn't really know how to make these new rules work, versus coming up with an excuse to leave. If they left, I should leave. Sure. You say, let me just figure out what the new rules are. Talk about, and I want you to think about this for all people of business. Because for me, when the going gets tough, I know the people that wanted easy money will go out, which are usually the ones that got complacent, which means that now I can get into the market, I can master the market, now I can become the big dog in that market when the rules have changed. Now let's talk about, do you think that 10 years later, years later, more than a decade later, do you believe that that's what gives you the edge today? The fact that you had to learn the new rules the hard way, so that when things eased up, now you became kind of like a strong force in that space? And if so, what advice would you give to an entrepreneur that the market's hard right now? Sales and percentages are down. We don't know the exact number right now, but we saw anywhere from 5 to 10%. Sales are down for everyone's business.
Big companies laying off, Amazon.
Shutting down, like completely shutting down completely. So with that, if that is the case, you feel like that was your edge. Yeah. Is that the same thing that you're seeing now in the marketplace, and why?
So anybody out there that's watching, it doesn't matter what industry you're in, live by this. Tough times don't last, tough people do. That's the truth, okay? So no matter what you do or where you're at, that mentality will make you better and pull you through. For me, I probably could have not have built character and been able to lead others without those pitfalls. One of the things that I joke around with some of my great teammates here and there of like, I've built them Salesforce and automatic texting and things here and there. And I go back in the day and say, dude, you ain't ever worked in an open house? You ain't never chopped with like,
in the gym.
So right now,
you don't know about no bottom of your shoes because of pavement.
Right.
Yeah.
You've never dug in a toilet and cleaned out stuff for $20 an hour to hit the bills. You're complaining somebody's pressing you about rate and you got my chat GPT talking for you.
That's right.
So the gaps are big. These are lessons you learn over time. I promise you, if you and I pulled the 20 most successful people that are the wisest people right now, they've got 100 of these stories.
Yes.
So anyone out there, don't flee. Do not flee from this stuff. There are things to flee from. Trials and tribulations and pain and growth is one you want to stay in. This happens for athletes too, right?
Yeah.
Things get tough here and there. Kobe comes back after his ACL, whatever stuff here and there. You can't run off this stuff. Now, if you're a pretender and you're not meant to be, and an industry changes, you're gonna get shown up. It's going to show, it's going to reveal itself over time.
Hey, did I tell y'all that? Go ahead, keep talking.
Right. So what happens in this industry when people are like, well, how come you're still, helping people in this, that? I'm like, dog, I showed up at 5 a.m. in the best markets, and I show up at 5 a.m. in the worst markets.
Come on.
Right. The difference is over time, I've acquired a bunch of skills.
Yeah.
And so my skills are now much more valuable.
Yeah.
And this is what people need, because these easy markets, anyone can pop in. But the hard ones are the ones that you make a name for yourself and you get calloused on. And then what happens is, how can I lead a team of people? How can their spouses count on me to stay in the groove and get it all going if I'm a jump ship? When it gets cold, if I run inside, I can't tell them to stay outside. I can't tell them to put in the extra work and the extra 10 calls and call that client back, blah, blah, blah. If I'm showing up at 9:30, I'm first one in. I'm last one out. Y'all are live right now. Go to my IG and look at Dallas Mortgage Man. Look at my story from right now. At 4:45 this morning, I do it on purpose, not from a bragging standpoint, but to say like, hey, my dad's not a home builder. My uncle's not feeding me deals. I'm in here doing the work. So the work will always win. And then over time, what you want to do is polish your skills. And those skills are acquired through mentors, through coaching, through people that are senior to you. I don't care if you're hitting a jump shot or you're working on your mortgage skills or business acquisition or whatever. The bigger pile theory, there's people out there that know way better. Like, if I'm trying to figure out how to be the best college athlete there, I'm going to sit next to Nick Saban and shut up and listen for 10 years. Whether you like him or not, he's a GOAT and he belongs on Mount Rushmore. He won't tell you like, oh yeah, my dad has dropped me in here and blah, blah, blah. He's got some backstories too. It's just that we get to see where he's at now. People get to see me and stuff now, but you can go back and follow the journey somewhat on social, but you can go online stuff here and there, but you talk to anyone in town in Dallas and they'll say like, dude gets up and works super hard. I've stumbled a million times. I still stumble, but this is part of the journey. When you see people online, Elon Musk, people like that, they're like, oh yeah, I just hit Tesla the first time around and made $1 trillion. He's like, that dude's got 900 backstories that failed. We just didn't see them all. So it's okay to fail. It's part of the journey. It's just you can't run when it gets tough. But if you don't belong, I promise you, industries will show you what you're made of or not made of. That should tell you a lot, tell your people a lot about you and about if you're actually meant to be to stay in it. So that helped me build the perseverance and the character to be able to sustain tough markets, because your brain is a muscle. You just train it. And if you give up quickly here and there, that's going to be your natural default. So being able to stick in it over tough times, it's I don't want to say it's comfortable, but it's not foreign. I can move through it and control it a lot better than it can move and control me. Now that I've been here, I've stayed in and done it. So it's just like, for the first time you ever got in a fight, somebody steps up to you, you get anxiety. If your first thing is to step out, it's an issue. Sometimes it's okay to stay in there and get a black eye, but you're better because you stayed in there and took it. You'll become a better fighter. You become a better businessman or woman, husband, person in general with all these lumps. So it's noble to stay in there and get it all done. But at the same time, if you don't belong, as soon as the market corrects, it's going to spit you out. And people can see that. And so now the ones that are still in it, but they're also not just in it, meaning like they're licensed, but they're still active and going and talking to people, doing all this. These are the ones, because people want calm in the storm. They want clarity. They want to know, like, how do I get through it? And when you got real skills and you got a vision and you got heart, skills, stay in it. It's just a matter of time.
Man, man, listen. Those that are watching live right now,
said, "Come on, somebody, this real life stuff."
Listen, they are absolutely loving it. This is how I know that this one's going to get a lot of traffic, especially the clips. It's going to go crazy because you give it mad game. And we talk about this all the time. Businesses are cyclical. You have moments when you feel like there is nothing you can do. and everything going right. You have moments that you feel like there's nothing you're doing right.
Everything going wrong.
But it's having that even keel of the goal every year is to win a championship.
Right.
You know, we may not make it this year. We may lose first round. We may have injuries that take place. We may have some things that we cannot handle or foresee coming. However, the fact that I'm in this game, I'm not quitting. Iggy and B, my grandfather used to tell me something. He said, listen, if you ever were to go to jail, and he always liked to use analogies. He said, if you ever were to go to jail, if you had to fight somebody, don't fight a lifer.
Yeah.
If you had to fight somebody, always fight somebody that has a set day that they know that they're leaving. Here's why. He said, because in business, son, when you're competing, and you're competing against somebody who's doing life in business, there's no destination. There's no end goal. There's no when I get to 1 million or when I get to 10 or when I get this car, I'm settling. He says, when you find a lifer, you got to understand that if you're competing against a lifer, you can win this year.
Yeah.
You can win next year.
They
you
coming
can win
back
in 3 years.
because they're going to be right there.
As soon as they get out of solitary confinement,
They coming right back to your head.
No short-term thinking.
Yeah.
I'm
Yeah.
in the game. I'm
Yeah.
trying to come hunt you down. And that it sounds like you committed to the lifer mentality. It's like, because even when I talk to you, and we've had conversations, brief, but I'm sure our friendship will continue to expound and we'll do a lot of deals together and opportunities things together. But Brian, when we talk, you know, it never seems, even the quick conversations, it doesn't sound like there's an exit. Like, you know, we talk about business exits. We talk about lifer in business. Like, I may leave an industry or I may leave a business at some point in time in my life, but I'm in the game of this business game. It sounds like you have that lifer mentality. At what point did it switch, or has it always been there?
No, it's a good question. I think when I was younger, maybe 5 or 10 years ago, you have like an end game from a monetary standpoint. But I think the older you get and you get past that piece, and this has not come without great counsel. I've had so many good coaches, mentors, which I still have now. They're the ones that program you and train you to get to this spot. But as you get older, if you have a love for the game, you don't really want to be off the field full time. You want to transition from player to coach. And part of that is your heart. You want to pay it forward. I want better for the industry. I want the loan officer or the realtor that's 28 that no one's teaching them the right ways to help them. I want a better experience for the consumer. And so part of this is the lifer piece. You just want joy in it. You want happiness, and you want to disrupt it and sometimes break the status quo, which I want to do. But that's reinventing yourself and becoming a lifer with different purpose and why every couple of years will keep you in the game and keep it fun so you don't get stale and want to fall off.
Man, I think that I think that's an important thing to think about, asking yourself, am I a lifer or not? Because you determining if you're a lifer or not will also determine how many hits you're willing to take. You know, how many times are you willing to fall and get back up? Because you don't know how important it is to keep your hands up when you're fighting until you get popped in the face.
You popped a couple times.
And every lifer looks at every situation as an opportunity, even the bad ones. So I don't look at like, oh, I come and have a bad day and blah, 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 whatever. Yeah, maybe it's a bad day, but instead of sulking in the day, it's an opportunity to say like, how do I step out of that side tomorrow? How do I come in better here and there? So once you start seeing through that lens, your bad days get less, but they turn into lessons. And that's how you grow. And that's how you get through it. But if you're not a lifer and you ain't got that mentality, you're one bad day away from being like and gone. And that's what you don't want to be.
Gone and you're gone. What? Come on, man. What you this, I
I'm listening.
A prophet here.
Yeah, yeah. This is good. This gets gooder and gooder.
But in that retrospect, like even seeing it from your lens with people that do advertisement, they do marketing for their business, how often do people stop because they're in it for like, I just want to hit 2,000 or 5,000. If I didn't hit it by this moment, I'm going to quit the campaign. Like, when you think about that, like, are those transferable issues and problems?
That's what I was going to say. Absolutely. As he was saying, and I was thinking about, the people that, we're talking about that this is the game I want to play, and they get in, get half of the information, put a lot of money up trying to, get to hit a certain goal and blow their account in essence. And they spend all the advertising dollars, don't get the return they were looking for, weren't tracking to know where the ups and downs were, didn't have the experience to know how to go in and make the adjustments, didn't hang around long enough to take the L's to learn, okay, that's what that looks like when the numbers start looking like this. This is the adjustment I need to make. There's a lot of people that quit too soon, that they went back to the job, not in an effort to come back, but in an effort they gave up of what it is they were trying to do and just went back and said, that's not for me. There's a lot of people that see that. I see it in marketing. I see, when it comes to advertising, see it just in marketing, understanding strategy. When it comes to implement that for their business, for product, for launches, understand that just because you have this idea, just because you did the research, you got the business plan on it, when it comes to actually executing on that and then being able to execute and get a result one time, two times, and consistently be able to get that result. When you understand that consistency, it's going no matter how consistent you are with the effort, the results may not be consistent over time. You may have to, you will experience those down periods. And if you don't have the muscle, if you don't have the know-how, if you're not in it for the life, if you're just in it for that monetary game, or you in it to get to that certain result, and you trying to watch somebody else and compare yourself to where your results are to where they are and compete with them, and you're not in it for the love of it or for the passion of it, or to understand that this is what I'm doing, no matter what, this is what it is I'm going to do, I'm going to figure this out. People quit all the time. People fall by the wayside. People are not ready to walk that long walk, to pave with bad shoes on, to run with messed up ankles. They're not willing to really do what it takes in order to win on a level that they think about. They're not willing to put in the work of what they see in somebody else who's achieving those results in order to get to the place where they are.
I want to ask y'all a question, and I want to hear Brian's thoughts first, and then Iggy, you can always backdoor it. Do you believe that lifestyle marketing has destroyed the respect that people used to have for entrepreneurship, or do you think that it made it better? What do you think?
So I think it's both, meaning it creates an opportunity, like social media, digital platforms, it creates an opportunity for people to get eyeballs faster in the event you have a great product versus sending out 10,000 mailers and keeping your fingers crossed and hoping somebody calls you, right? That component of it is great, because if you have a good product and you can get it to the street, the market is the market, it's going to bang accordingly. However, the flip side of that coin is you can appear as such online with no depth, and it does distract and confuse the consumer and other businesses on separating the real from the not. So this is where I think it's a gift and a curse. Mm-hmm. Would I take it away? No way. Would I like to modify some stuff? Sure.
Absolutely.
Sure. But again, it's like going back to it, it's a long game, it's a lifer. I mean, every lifer that I know is so in love with the process and the journey. Mm-hmm. And when you fall in love with the process and the journey, it's a long-term thought. You know there's going to be bumps and darkness along the way. That also should be shown online. People should be talking about their failures.
For sure.
All you see is their trophies or want to be trophies here and there. That's not good. I personally wouldn't be attracted to that because no one's that perfect, and no one's that profitable, and no one's that great. So you have to share some real stuff there. And so I think it's a model that people take, which is the fast track, because it's easy. It's easier to appear as such, and it's easier to do this online versus making 50 phone calls and meeting 50 face-to-face. That's the work piece. So it's both. I think with the right individual and company, to the moon. With the wrong one, it waters it down. But again, just give it time. Just give it time. Like if I say I'm the best boxer around, and it's like, fine, here's the deal, step in the ring. And business is a sport. We just keep scoreboard in a different way.
Right.
So I think all things have their evil tail and the bad stuff about them when the wrong people misuse them. But overall, I think it's better. But the problem is that people are shortcutting the purpose of it, which can mix up the good with the bad, and this is where society and the market has to test it to make sure what they see is what's actually there.
What's your thoughts?
I actually agree with a lot of what it is that he said. When it comes to lifestyle marketing in general, I believe like marketing in general is lifestyle, but I think what social media has done is allow people to only give one spectrum of that lifestyle, and to the point that they feel they need to fake it to a certain degree in order to portray that aspect of a lifestyle. But when it comes to, we're talking about in the context of lifers, when it comes to the lifestyle of business, we're talking about the up or down and what that lifestyle looks like, what the lifestyle looks like of being
the full
down,
lifestyle.
the full lifestyle.
Yeah.
Being, because in truth, when you really in business and you committed to it, even in your down times or the times it seems worse, you can find the lessons in it. You can find laughter in it. You can find things that want to allow you to move forward. But social media has gotten people caught up in showcasing the result, and I think that it's a lot of mainstream and pop culture that's kind of got infused into the way that people market, trying to portray or cater to a certain type of demographic lifestyle, and they think that lifestyle they think that it transfers across all demographics because of what it is that has been popularized by social media in the trends of marketing. But when we get down, we even see this in our paid advertising campaigns. I look at trends and try to figure out, like, what's the other side of that trend. Is everybody's going this way, this can't be the only way to go, so what's that other option? And even in the type of content we put in our ads, where everybody else is really like high energy up here trying to do this, dancing, smoke flares flying everywhere, we found that in our marketing and our advertising campaigns that a much more direct approach, that a much more calm and focused type of energy has actually been able to help our advertising campaign cut through the noise of showcasing the real, showcasing how like this is who we are. And then when we look at the organic content that we've been posting, talking about the L's, talking about the $3.5 million loss, talking about how you had to sell the Rolls Royce, but even with that, it was something where you were storing your money, when able to leverage that to still take care of to help the business out. Those things is what I believe is the totality of lifestyle marketing. I think that the social media has allowed people to only grasp a certain aspect of that, which is kind of polluted the market, if you will.
Yeah, for me, I hate it.
Yeah,
I hate it because I don't know how you got that car. Like I don't know. Y'all want to know the real reason why I bought the Rolls Royce? And it's petty. Brian, you're going to find out about me. I'm just competitive in all things. I may act like I'm not competing. You're going to be like, how did you get the same? Yep. Iggy wrote a book. I said, I think I want to write another one. I'm like, he's like, bro, what are you talking about? That's just me. I tried to hide it. I'm just competitive, and I talk all the time. I may talk about you, but just know if I talk mess, I'm going to tell you.
Yeah.
If somebody say Dr. Jake talk mess or Jake talk mess about you, and it's more than a week and you didn't hear me, I said it to you, they lying. Because I can't wait to tell you. Because that's just me. But the point I'm making is it kind of cheat codes the process. Because if I'm using this Rolls Royce as a prop, the reason why I bought it is because I knew several people who rented out the same Rolls Royce every week just when they went out, just so they can stunt and use it as marketing. Then I found a lot of people that were like, bro, I'm like, yo, this is crazy.
Yeah.
So I went and bought it cash, document the whole process just to show people. And I walked into the Rolls Royce and I'm looking around. Nobody came to me. I said, okay, that's fine. I walked out. I walked back in.
Feed the beast.
Nobody said anything. I was like, oh, they think I'm broke? But I didn't look like the typical person that would come in a Rolls Royce. Like, I had, like, flip-flops on, whatever. And it goes back to dress the part of whatever environment you want recognition from, dress the part of that environment. Cause if you dress down, you're gonna just feel any type of way. So I'm like, so I gotta look. So I went to the manager. I'm like, yo, like, what's up? Y'all don't like me in here? And he just bust out laughing. He said, no, I'm gonna help. I said, it was funny. But I was really joking with him, but he found a lady. She said, I'm gonna just be honest with you. Typical people in Dallas that buy Rolls Royce are 6-year-old white men. I'm sorry, when you came in here, I thought you were just perusing around. I swear to you, I'm not racist. I didn't even think about that.
Yeah, but
since you said it, then we made a joke of it. But the point I'm making is, when I walked in, this is the bad influence of
lifestyle
marketing. Because me, who's usually extremely frugal, like I'm the last one to let go.
Conservative.
Yes. The stuff I bought just to show people like there's a difference, it's just ridiculous. So I walk in there and I'm like, y'all want to get a Rolls Royce? The lady was like, which one, hon? I'm like, man, that one. And she was like, are you sure you want? Have you ever driven one? Nope, don't want to. Get it now. And so she's like, well, it's cheap. Money's cheap now. I want to get it cash. She said the whole thing. Hun, are you sure? I ain't playing. Sign the papers now. So she's like, okay. So I drive off. I was driving for about 3-4 months, hurting my back and everything. I couldn't get the seat together. And it felt good, but it's not something that I wanted. Point I'm making is, I did prove a point, but on the other side of that, bad lifestyle marketing would be, maybe I would have been the person who didn't have the money, that thought I needed to get the car in order to do business. So I'm getting in debt to get lifestyle stuff just to do business, only for the business not to be able to pay for the lifestyle stuff. And now I put myself in a bad situation. I just don't like it. I tell you this, I tell a lot of people this, Brian, all the time. If I had a choice, I wouldn't be an entrepreneur.
For the people out there that are the lifestyle marketers, I'll tell you something. You can't trick the real ones. Ooh. You cannot trick the 1%. You might trick some people, but you're not tricking the people that really know. And I think that's where the separation of like, I'm not really going to pay it that much mind.
Got it.
It's a distraction. It feeds the wrong narrative in my mind. Now, every now and then, does the competitive person want to come and check them? Sure. Every now and then. That's good, healthy competition. It's not fronting with a complete fake lifestyle to appear as such. So right. I think there's a healthy way to check that. If you're a competitor, to say like, no, this isn't documented. I didn't rent this across the street and give me a 60-second clip. Here's the cash ABC to prove the point. That is fun in its way by nature, to show everybody my game is real when the competitive spirit comes out. But for those out there on the lifestyle, dude, I understand sometimes it gets fast money things here and there. We're in a society that makes it so easy and praises it that it feels like the way to go. But if you're really trying to be something and trying to be somebody, you won't do that. You'll end up with that money doing it the right way, but that stuff is just empty. The real ones in the 1%, we can sniff it. And
let me ask this, because I know there are people watching right now that's going to watch it. This is going to be a good take, especially with the question. The question that I have for you is, you mentioned that you didn't know anything about this world, loans, anything. At what point did you determine, or did you figure like, I can see myself doing this for a long time? Because clearly it wasn't a passion of yours. It wasn't something that you fell in love with from day one. It had to be something, a love that kind of grew on you. For those out there that's trying to follow their passion or whatever these things are, what are your advice to those folks? Because it's a balance for sure, but from your perspective.
Yeah, so I think that's really, really good. So I think, finding something that you're passionate about naturally and pouring yourself into that, it makes work easier. You come to the workplace looking at it like a career versus like, I have to clock in for that. So try to find something in industry, something that you're passionate around. It doesn't matter if it's entrepreneurship, mortgage, medical, marketing, cookies, cooking, whatever. If you can find something that you're naturally, truly interested in, you'll find yourself with a better interest. The second piece about that is, people have to understand that whatever you sink your teeth into, it's called work. It's not called play.
Come on.
So make the best of it. Increase your skills as fast as possible. It'll make you better. It'll make the job easier. It'll make the journey better. And so for me, it was one of the things to where like my natural skill set of speed, problem solving, math, and folks made it a little easier to sit in this seat. Meaning like the mortgage space was a good fit for me. So I didn't know it at the time, but it naturally grew on me over a long period of time. And so this is where I think people have to figure out which direction they want to go. But I also think around getting around good people that will help you find your place is healthy for your future. And so if you're not surrounded by good folks as well, regardless of what industry it is, you're not going to enjoy it. You're not going to learn to push forward. So finding something you're interested in, acquiring skills over a period of time, I think getting around good folks, that's a formula to make sure you're headed on the right path for sure.
And then I have a couple of selfish questions, and I kind of talked with you before about this. You know, us being from the Black and brown Latino community.
Wow.
Accept who you are, bro.
Wow.
Yeah, you
just want to just.
Yeah, I'm just putting all of who you are out there. So, being from the Black and brown community, there are instances where getting access to the same type of capital has been a little bit harder. Your best friend being somebody from our community and our culture, so you understand from the other side, and you being in the loan industry, how that game is played. I told you that we were trying to acquire a tech company, and thank God we was able to work a different financing deal. But a company reached out. They said they wanted to give us the acquisition. They had the capital for us. They even approved us. We signed the paperwork. I sent our bank account stuff, and then the loan company was like, "Hey, send us their website now, and then send us his passport, my passport, or my identification." I sent my passport. I sent the website, and if you go on the website, it's Black and Brown, from international staff to Latino, Blacks, and all of that on our staff. And then all of a sudden, they sent us an email that stated the documents that you sent us seemed to be altered in fraud. And then they sent to whoever the loan originator was. It was a total different communication, not the same communication that they sent me, not the same one that they sent him. And when he reached out to me, I reached back out and I said, "Well, how is it fraud?" Because I downloaded it directly from our statements. I sent it directly to you all, and y'all have access to the account. Y'all can go and check it yourself. But to me, it seemed as though, how can you make this much money? How can y'all be doing these numbers? And they pretty much literally stopped all communication without any feedback. So what advice would you have to people who do deal with that in our community, in our marketplace? And what advice you have?
Yeah, I mean, every lending and depository institution has a set of rules and compliance they need to follow. Major or minor, black or white, it doesn't matter. But if you feel like you're not getting the same treatment as everyone else, you're allowed to go back and voice it in the right way. These bankers, executives, whatever it is, they understand what can and cannot be done. It's just that in industries that are this big with this much discrimination, it's very hard to navigate through that on a day-to-day,
right,
via email conversations here and there. Because the truth is, I don't know any more than you on the banking side, SBA stuff here and there. Now, I know there's some compliance rules about the way they have to go about it and decline it and do a little bit of discovery and things here and there, but they just can't flat do things like that. They're just hoping that, this person's not going to do it and blah, 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 and doesn't know the stuff, it'll go away, or they don't want to deal with it, right? So it goes back to kind of what you and I were talking about off mic, which is, the bigger friendship and the bigger team and the better team you build, you will protect around things like this in all fashions and forms moving forward. But it's unfortunate that people don't see society in a better manner today of like, it should not even be about that. It should be about the resume.
That's right.
This goes to like my funny, if you had Jordan's resume, Kobe's resume, LeBron's, and there was no this, and you just read it off the data, that's what it should be.
Let me Jordan.
The problem is that we, of course, I agree.
Same.
The problem
You agree?
is,
I'm about to kick you off just a bit.
I'm MJ all day. LeBron is great in his own way, but not a chance. Anyhow, you have to have people in your corner that know what they're doing to help protect you.
That's right.
In all areas.
That's good.
And it's unfortunate that discriminatory stuff still goes on all the time. Yeah. But when it comes to a bank and something like that, and they just passed off somebody else and email stuff here and there, I mean, they have a compliance officer. Their full job is to make sure that everybody's being treated fairly, correctly all the way through.
That's right.
Their job is to check and balance.
That's right.
The problem is the man works for the man, So really, where's the check and balance? It's like, oh, this Congress lady just dumped her stock a week before it fell, and it's like the same thing.
Right.
So how do you keep the people inside accountable? Well, you got to get a good team around you, and you got to report things, and you got to know what you're doing to give yourself a fair shake. And you have to be with people that know what they're doing, but also care about you to make sure that you're getting the fair treatment and get everything done. Because the other piece about that too is that, we talked about this off mic as well, which a lot of this business and any business, either transaction based or relationship based. If you're relationship based by design, you're going to care more about the person and their outcome and their results and their ROI on that stuff.
Right.
But if you're just a regular banker that's a transaction banker and this, that, and the other, you may not give the appropriate treatment to everyone, which is unfortunate. But the relationship piece, in my opinion, will protect you better than not having it.
Got it. And you talk about team a lot, and now this is selfish for our listeners and our watchers. Team is what you talk about all the time. I tell my guys we operate as a team with the companies that we own, the team meetings that we have with the other tech companies that we manage and own, the insurance agency, the meetings that we're on. But internally, we operate like a team. Can you talk about the importance, because you and I talked about the likeness of collaboration with likeness. If somebody were to build a team per se, let's say people get too caught up in the semantics of I got to pay this person, I got to pay this person. Does that mean they're on my team or whatever the case is? Talk about move money aside. Mm-hmm. Who should everyone have in their Rolodex as far as needed on the team?
So the first thing everybody has to do when they go through the discovery process on this, you whiteboard, you do a 1, a 3, and a 5-year vision. If you don't have a vision, you don't know where you're going, you can't build a team. Okay, so if you're wanting to build a team and get a business plan together, you do what's my 1-year vision, what's my 3 and my 5. And then what that does, it reverse engineers for you of, okay, to get to year 1, I need this many people with roles and responsibilities and a flow chart things. It's like if I'm going to build a basketball team in a year, I'm going to win a title. Well, I got to have 2 guards and a forward. I mean, you don't go blind. So business is similar in nature. And so you have to figure out the vision, because if you don't know where you're going or building, how are you going to know how to hire?
That's right.
So start with the vision. Second thing is don't reinvent the wheel.
Oh.
There's a lot of really good people out there with solid blueprints that will carry over to your industry or that you can borrow from others. Mortgage business, real estate, entrepreneurs, medical stuff here and there, you have a quarterback, you've got receivers, you've got a running back here and there. And so that's the other piece is you're not the only one going through this. Somebody else around you has done something similar or somebody in the past. So you can borrow a lot of success, right, from others. So you have to figure out short-term, long-term, see where you want to go, borrow as much as you can. And if not, just kind of play the hypothetical, which is, all right, if I got this much business, blah, 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 what are the next steps? And this is why I like flow charts. I like metrics of like, once I get this many deals, I need this many people. Roles and responsibilities, things in there, and you can engineer up and down. But you got to have a leader, number one, because they have to have the vision. This is where the people go. So that's the first person. When you get that there, then you have to figure out, hey, who are the additional people that I need to have behind me in order to carry this torch and get it all going? A lot of times, depending upon your vision and your business, sometimes that's an assistant, sometimes that's an accountant, sometimes that's an attorney. There are circles of that. And some of them come first and second, depending upon the industry and the specific person's vision, but all of them end up being a full spoke wheel. So my answer to that is, get the vision first, make sure the leader knows where they're going and they're clear on how they're going to get there. And you can beg and borrow and copy a lot of things that have been done over time, specific to your industry, and then getting best practices from other folks. So a lot of the game's out there.
Okay, and then that's internal team. What about external team? So what we talk about is, as the business owner, you need your lawyer, you need your this person, you need your that person, depending on your industry. Your external team, you built an external team. Financial advisors, realtors, other
CPAs.
loan officers, CPAs. Mm-hmm. Is there a specific number, or is this a caliber of that you look for the
older I'm
team?
getting, I'm top grading. So, and when you're young, it's like I'll take whatever because I want to get it going. As you get older, you realize, more is not always better. Better is more. Mm-hmm. And so you start to figure out like quality.
Yes.
Okay. Well, and this is where I figure out. Well, I have to be really good if I'm going to go after somebody good. So I have to up the team, up the processes, the system, the technology, the gifting, the value, and all that. So As I'm getting older, I would rather spend more time with quality people that are like-minded because I know my clients. I know who the clients and partners are, which tells me I know who my clients and partners aren't. So you have to identify that up front because you will attract that and go after that. But you have to be careful about that direction because sometimes you can just spread your wings too far and there's nothing wrong with it, but you burn up time and energy and stuff here and there. So the more you can anchor on financial advice, and that can be all stars from attorneys and accountants and financial planners and probate attorneys and divorce attorneys, everything under the sun. Or you can just start with your local business, right? Think about what are the top 5 business people that'll drive the most business to me.
That's good.
And then you literally make it and say, okay, mine are realtors and home builders and blah, blah, blah. So, okay, great. So now I know who the target audience is. Then what's my plan of action to go get them? What's my value add, follow-up things here and there? So stop and say, like, what pillars of business can provide the most referrals to me and what you actually do? If you ain't got those identified, you just shooting blind. Keep it simple first and then come up with a plan of action, value proposition, reciprocity piece, all these things after the fact, and then you can get a list. Start calling people, walking in social here and there, and you back into those small things. Then those become daily behaviors, best practices, time management. Then you start getting into KPIs, conversion ratios. Who do I want stuff here? And that stuff grows over time. But that's the way you need to see the business. And the faster you can learn from others, you'll just fast track your success and others as well because we all learn from each other.
Listen, what I'm going to say is, I got about maybe 2 more hours of questions that we ain't got time today.
Yeah.
We're going to have to bring them back, especially when my hair is cut. I'm not sick and I don't have a breakout on my face. I just had to get
put your suit on that day too?
I'm definitely going to put my suit on that day because I'm fine again. Today, I feel iron, not fine.
You did that for me to make me look good, man, be honest.
Oh, no cap.
Next time to show me up. When we do part 2, I got to come better.
So
He took it easy on me today.
Hospitable.
Right.
But what I will say is he will be back.
For sure.
And hopefully we'll see him often, especially like with that mortgage piece and understanding the loans and stuff like that because y'all may not feel it here, but hopefully you can feel it in the video. I mean, he got great energy.
Yeah, not only that, but you also have an interview with him on his channel as well that I think people would definitely check out. Actually, Brian, if you don't mind, just go ahead and drop your information. I know you kind of trickled it in throughout the interview, but just you mentioned a couple websites.
Yeah. So my birth name that my mama gave me is Brian McCauley, better known as Dallas Mortgage Man. That's all my social handles. Website's dallasmortgagenews.com. He and I got our podcast dropping. It's a wallet watch, so it's all things financial, real estate, entrepreneurial, keeping your eyes on your money. We got an episode dropping in a few weeks. He's got some major nuggets for me and for my audience and crew. So full circle, everybody's helping everybody, and this is the way that we, treat people better, educate people, show them a better way.
I got quick. Do your game, the game that you give, does it only pertain to people in Dallas, or is it transferable to anyone that's
Anywhere.
looking in the space? Okay.
It's like good advice, good coaches.
Yeah.
They know how to cut, shoot, pass, whatever, blah, blah, blah. I'm only licensed in Texas, and the reason I only really originate in Texas and mostly Dallas is because I'm old school and I like to be able to shake hands, hang out, and chill. My advice can go as far as you can take it, right? But if you want to meet me, I'm local. But I'm down to help anybody anywhere because good advice is good advice.
For sure. Hey, listen, this has been a great first interview, man. You came in and you provided a ton of value, a ton of information. The chat is lit. They are getting a lot of value from it, and I definitely know for a fact that they will love to see you back. There's a lot of people from our Private Banker Society community here, and they're getting a lot of value. Just if you could leave just one thing out of based on like the conversation today, your experience, everything, if you could leave people with one thing for them to sit on, for kind of take with them and kind of move forward, what would that one thing be?
From this interview today, surround yourself with people that know what they're doing. Plug in, help each other, and be patient. That is a recipe to win.
Awesome. Well, unless you got something else to add, Doc.
No, I'm full.
You got something to add, Shan?
No, I'm full as well.
Awesome. Yeah. Well, guys, this is the Private Banking Society show. We're here weekly, live, giving you good information, good game, so you can kind of move throughout these markets and this economy with business, with finances, and all things in between. With that being said, it's Iggy.
Dr. Jake.
And this is our special guest, Brian.
Appreciate the love, y'all. Thank you.
Peace.
They got it, but let's buy some land and build a family. That's a grown-up flex. Let's see a black man winning and get so upset. This is generational, inspirational, integrative though. On the rise vertically, working like I ain't made it though. This is for my people. Locker room speeches.